Right now, I want to talk about China update and also at the same time teach you a very important tips on what really drives market returns, and so that you can make better decision. All right. So this is quite an important slide section of my presentation, using China as a case study. So if you look at China's return right now, the red color being the S&P 500, and the other the candlestick represents the China index, China MICI China ETF. This is the year-to-date returns from the beginning of 1st Jan to today. Today is on the 19th of October 2024, and you can see that the China ETF has actually slightly outperformed the S&P 500, right? So now, right now, it's no longer the S&P 500 that is doing extremely well. It turned out to be China that is doing extremely well, and I've got you to buy the China ETF around here and here, okay, at these two points. So congratulations to many of you who have taken my recommendation. I know majority of you reluctantly accepted it after my persuasion. But unfortunately, about 3 of you guys had decided to fire me because of my recommendation. I'm very unfortunate because these 3 investors, of course, they are not in this Zoom this webinar. They have decided to follow their instinct and emotions rather than their financial advisor. So their financial advisor turned out to be their own emotions. Very unfortunate. For those of you who are listening in, I guess who were with me during this period, you took my recommendation. Congratulations to you. Now many of you have actually expressed a lot of concerns when a lot of you have expressed concern about this recommendation that I've previously asked you to do. And typically how your concern will look like is something like what this client have messaged me. In May, I recommendation, and I made a recommendation, and this client says that, Wilfred, I saw your recommendation, even though I'm not still confident in the China markets. So I replied, what are your concerns in China? So she replied, the lack of confidence that the fundamentals strong, and generally the lack of confidence by Chinese people in China. Sentiments of my Chinese colleagues and suppliers seem to be weak. Most people are moving funds abroad and getting an alternative citizenship, and generally a distrust of the government. That's my sense of the sentiment. Right? That's what she said. Notice the keywords used is lack of confidence, sentiment, distrust. Okay, these are the keywords that have been used. And then same time in August, when I gave an update on a stock market crash in 6th August, to every one of you, I expected concerns about the US stock market, but instead this same client reply said, I'm more concerned about the China funds. This client actually, at any point of time, she ever suffered 30 to 50% loss in US stocks before, right? And yet she was more focused on the China ETF, which is had less losses. So anyway, and on August, she says, should we set a loss limit for this China fund? So I had a long time persuading this client not to continue with the investment, right? But most people, when they express their concern, they are more straightforward, right? They will say things like, I don't want to invest in Hong Kong, China anymore. It's more straightforward, okay? Don't have so many words, right? Now, the reason why I'm showing you is not to criticize or to make fun or to show I'm better than you, I'm more knowledgeable, more experienced, you're lousy. No, don't get me wrong. In fact, I'm so happy that these clients actually answer me, right? What are your concerns? And she say this. I'm so glad that that this client actually expressed her concerns, and many of you have actually expressed the same concern. So I'm really glad to do this because that's my job, right? To listen to you and to provide the empathy, and then run alongside with you. View me as your coach And I cannot be your coach unless I know your pain, right? Or you can view me as your physiotherapist, and then unless I know your pain, your problems, no, and otherwise I will not be able to treat your pain, and listen to what your heart is thinking. I cannot read your mind. So that differentiates me with robo-advisor, which has no empathy and will not understand your pain. I'm highlighting you because she actually rightly pointed out some facts, like the lack of confidence, sentiment. These are all factually correct. Yeah, I do not deny these are actually correct. Now, why is the sentiment in the China so bad? What went wrong with China? Now, this is old slide taken from 23rd of March 2024. Okay, so just to have it in context, that these are not new information. So on 23rd of March this year, I mentioned why the sentiment in China was so bad. Primarily because it has a prolonged COVID lockdown. Other countries, China actually, their lockdown was extended by extra 1 year because the government was very conservative, fear of the virus spreading. There was a real estate bubble burst, and it's probably going to be a problem for a very long time. And when most people who are in real estate, and it's a problem, it has a very negative effect on sentiments and confidence. Common prosperity is a new thinking in a communist government, where money is supposed to be shared, right? So many large and successful companies like Tencent, Alibaba will have to provide donations to support to help the to help others, right? Such donation is seen as an indirect form of taxes, because government's supposed to be using taxpayers' money to run social programs, right? But now just because a company is large and successful, they are now required to do that as well, implying that their tax that they pay is higher than the other smaller companies, and therefore discourage enterprise entrepreneurship. Imagine if you're an entrepreneur and you do very well, you will be targeted to participate in common prosperity. In other words, you'll be targeted to pay more tax. Punishing companies whose founder have a different political view. So Jack Ma actually disappeared for a long time. Sometimes he's right now, sometimes he appears and doesn't. But Alibaba was punished, and many of his individual businesses were torn apart and so-called confiscated by the Chinese government. Of course, the US-China trade war is always ongoing. So this resulted in very poor sentiment, and it's nothing new, right? But sentiment is actually one indicator of where the stock market is. When times are doing well or getting better, we see excitement through euphoria, very positive sentiment. However, when you're going down or when you're at the bottom, you will feel panic, anger, depression, hope. So sentiment is one of the indicator of where you might be in the market cycle. And so it's quite important for you to identify this. Now, sentiment affects investors, right? So the Chinese people are very discouraged, right? But for you as an investor, you cannot be discouraged, because if you are discouraged just like everybody else, then you become the market. And when you become the market, what does the market do? Investors in the market sell low. And when things go well, they buy high. So you must detach yourself outside of the market. You must be a third-party observer. You cannot participate in the roller coaster of sentiment, okay? The roller coaster of the psychology that affects everybody else. And that's why the 3% didn't want me anymore, because they were part of the market. They allowed themselves to be part of the market. And so they go along with the roller coaster. And I tell them many times, you need to detach, but they could not. And so they sold right at the bottom, right? Right at the bottom, they sold all the holdings in China. And just before the China bull run, they sold. So they sold right at the bottom. Now, this is nothing new. I'm not inventing new theories, okay? This psychology of the market is known for 100 years already. 100 years already, there's nothing new about it, right? but yet people still does not get it, right? So you need to get outside. So the question that you ask is very important, because if you ask me a question like, so I sell this now, okay? That is a sentiment question. Okay? You need to ask more questions which show that you are detached away from the market. But is a sentiment really a good indicator of the stock market? You know, I mentioned sentiment might indicate very poor sentiment might indicate the bottom of the market, implying that the poorer sentiment, the better it is for investor. That's not one of the, that's not the only one. There are other drivers of the stock market, like the expected economic growth. Expected, it's not the economic, it's the expected, because the stock market is always forward-looking. Expected economic growth, expected inflation, expected job creation, monetary policy of the government, fiscal policy of the government, political stability, sentiment and confidence, which I just mentioned, and current valuation of stock market and individual companies. Now, none of them is will solely be responsible for the stock market return. It's a combination of them, and so the more, so when you want to invest, at least from a macro perspective, you will need to look into all this, right? Yeah. So, okay, so someone asked me, Chin Yong asked me, how will Trump win affect US and China market, both short and long term? US and China market is really right at the bottom already, right? In fact, if you realize that Biden have not done anything, have not dialed down Trump's policies, right? What did Trump do? He imposed huge amount of tariffs, a lot of tariffs, right? What did Biden do? Nothing. That's why Biden cannot. He cannot. So Biden cannot be. That's why he's not a very good president. He did nothing, right? So if Trump wins, it's really status quo, right? It's really the tariffs is there. In fact, for after Trump's, the US tried to get many of the European countries to do the same, to impose similar tariffs. So it looks like the whole world is now getting up against the China, right? And that's why China market is really very poor. I believe that the stock market has already taken account of the possibility of Trump being the president. I think I'm more worried about trigger happy for Trump. Not so much on politics or economy, more like, Trump may just press a button and fire a nuclear bomb to someone that he doesn't like. I'm more worried about that than the trade war and economics for Trump. And also, you must understand that Trump is a very self-centered man. He has a lot of self-interest. Right? So much of his businesses is in US. So he will never do anything that hurts his own self-interest. So he is business friendly. So he wants to protect his self-interest. Perhaps this tariff against China is to protect his self-interest, also to protect his own businesses as well. In other words, continue to invest in US. Okay. Go on the 20th of March, I mentioned why the bottom up in China, right? And that's the reason why I started to ask you guys to invest in China. So in 23rd of March, I mentioned that the bank reserve ratio, China has decided to reduce the bank reserve ratio. So this will inject 1 trillion renminbi into the market. Restriction in short selling, rescue package of 2 trillion renminbi from the offshore account, and then 300 billion from the local onshore account to support the stock market. Okay? And later I have a slide to show you to prove that this was indeed done. Huge amount of money that was used to stock market. At the same time, many of the global fund houses have actually cut their allocation to China, have pulled out their money from China, okay, because of the chronic disappointment and reducing the exposure to China to underweight. Now, when you see institutions doing that, it's likelihood that the bottom has arrived, because institutions are supposed to be very smart. But unfortunately, institutions are the most stupid people, because they form a large part of the market. And you must understand that fund holders, fund managers, they are paid a salary. Okay, they are mostly paid a salary, and all they think of is to keep their jobs. And so for fund manager to keep their job, they need to be accountable to their bosses. Okay, and so if there's a lot of bad news, the bosses see all this bad news, you think the bosses will like it? No, because their bosses and bosses will not like it. And so the fund manager will quickly sell all their China stocks or those investments that is in the bad news, so they can tell the boss, when the boss asks the fund manager, so what are you doing with this this poor investment or China? The fund manager, I already sold them already. Rest assured, the fund or the assets that under management is in safe hands. It's already sold already, so you don't need to worry. And so the bosses will feel, oh, I'm at peace, and can tell the bosses everything is all right. The reverse is also true, right? That when the times are good, the fund manager will quickly buy them, so that the boss will ask, have you done anything in view of the bull run? Yes, bought already. Enjoy the bull run. And when the fact sheet appear, annual reports here, investor can say, oh, this fund bought this, and it was a good stock or a good country to invest in. This is known as window dressing. So really, fund managers, they are even worse than, they're potentially worse than retail investor, because their self-interest is to keep their jobs, and they will not do anything to jeopardize their jobs. So when you see that all this is happening, when the global fund house is pulled out, instead of buying more, you know the bottom is near. Okay, this is a proof to show you how much money was pumped into the system to support the stock market. This slide was taken on 23rd of March again. So this is an ETF, CSI ETF 300, tracking the top 300 companies in China. And this is a volume index. So the amount of volume that traded was spiked because of the government intervention to buy the Chinese stock through an ETF. So this is how it really works. I mentioned valuation. China valuation was also nearly the lowest over the 5 years, right? And so this indicates that China also was at the bottom. Again, this was the 23rd of March. So among this list I mentioned, what drives the stock market? So in case of China, do this indicate that it was a good potential good return coming out? No, for the first one, expected economic growth wasn't that great. Inflation, not that great. In fact, there was fear of deflation. Job creation, no, because there was report of many youngsters who have no jobs. Monetary policy, yes. Fiscal policy, yes. Okay, there was actual monetary policy and fiscal policy, and there was also expected additional monetary and fiscal policy. Political stability, yes. Okay, China is politically very stable. There's only one party, right? There's no opposition party. But in this context, right, I'm referring to the focus of the government from power, politics, and power and politics to more on the mundane, day-to-day concerns of the people. So they are now more concerned with the real estate being burst. People are discouraged that their largest asset is now in negative equity. Yeah, and stock market is down, where people feel very poor. So these are the mundane things that the Chinese government is now shifted to focus on. So that's what I mean by political stability. Sentimental sucks, right? Sentimental and confidence sucks totally. Fund manager also has confidence totally lack, and therefore this is a good thing for investor. Current valuation at all-time low, or rather 5-year low. So among all these criteria, actually it meets many of them, except the first three. The rest indicate that it was a good time to buy in March, April, and May. Now, on the 26th of September 2024 and onwards, there was announced that the Chinese is going to supercharge, right, additional monetary and fiscal policy. So the Bank of China, the central bank, reduced its reserve requirement by another 0.5%, which will inject 1 trillion renminbi into the financial system. The mortgage rate, interest rate has also been lowered, so as to provide at least savings, more savings for the home buyers, or rather existing mortgage holders. And also, the central bank will also fully fund 3 billion renminbi of loans to state-owned enterprise to purchase unsold homes and convert them to affordable housing. Okay, so that means there's a support to the real estate market. This directly to focus on the real estate, to support the real estate, to buy all these unsold homes, and then to convert them to government-owned or more affordable housing for the people. Okay, since that real estate is an important element in most countries. Down payment also has been reduced so that homeowners, can afford to buy, right? So again, to support the real estate. Fiscal expansion still under discussion. However, there's talk of $10 trillion of stimulus package that is being considered. So the Chinese government is thinking of issuing what I call ultra-long government bonds to spend on projects like public services, housing, infrastructure, So yeah, basically is to support the market, is spending, right? To spend on this. Okay, so now this is the return so far, right? If you have taken my recommendation, this is the typical kind of return you'll be seeing. MSCI China 25%, Alibaba 26%, Tencent Holding, okay, no big deal, about 10%, BYD 51%, CICC 29%. These are the typical returns right now. It wasn't too long ago that what you saw when you log in, you see the same numbers, but as I said, it's a negative sign, it's a red color, but now it's a positive color. So you have taken my recommendation. Congratulations to you. Okay. What is really important now is not so much on you took my recommendation, but more on the things that I need to learn. Okay, which is this one, right? There are many factors that drive the stock market. Sentiment and confidence is only one of the many. But I know many of us will only focus on this because this actually does influence you in your emotional well-being. To address this concern, you need to step out of the market and observe from a third-party point of view. You need to step out. Do not be part of the crowd. You need to step out in order to assess the situation objectively. Objectively means all this. Of course, it may be quite hard for you to do that since you do a lot of research, but that's my job, right? This is my job to help you to make faster decisions by helping you. And most importantly, never ever let emotions dictate your decision making. Never. I guarantee you 101% that you will sell low and you'll buy high.